All right, welcome back to another week, another update. As you can see, I got my Bama Blows shirt on. Big LSU guy, and LSU plays Alabama this weekend. And if you follow anything with sports, you will know that they will likely get stomped. Their coach just got fired, but I think they were going to get stomped before that anyway. But who knows? So we'll see. But anyway, I had a whole update talking about all my stuff from last week, week over week. But if you follow in the market, you could see it's pulling back significantly today. So whatever I showed you on that particular part of like the overall account update is pointless because when the market closes today, it's going to be down. I'll be down $8,000 or $9,000, which is fine. But what I will show is how we're doing to November goals already, which it kind of plays into this whole strategy. Is all the work that I did in October. I've already far exceeded goal for November by just premium. So there's some upside available there by some additional covered calls and things like that. But the good thing about getting way ahead of this on the options is, if I don't do one other thing, I've already collected those premiums. If I just don't buy out of them early, then the month is already set. So it could really only go up from here. Now, technically, yeah, it could go down if I close some of those early, and move those positions into December, like we talked about in last week's video. When I talked about rolling up cash secured puts, not technically through the tool, but just closing one early that's well through its profit, well through its premium, and to get into another cash secured put either in the same stock or in a different stock. So that's what I consider as rolling up. So what I'll do is I just kind of show you how we're doing in November and then just show you a couple things in the charts and then let you guys go for this week. All right, and taking a look at the goal, I don't know how close you paid attention to last week, but the October number was in the 2000s and it came down a little bit. That's because I'm recognizing the covered call premium now when the covered call expires. Instead of the way I was doing it, I'd recognize that premium right when I sold that covered call. So a little bit different. So what it basically did is it moved some of my October realizations of premiums into November, which beefed up my November a little bit. But as you can see for October, we beat by 1%. And right now for November, if I don't do anything else at all, I'm already beating plan by 1.5%. And I expect this to go up a little bit because I am in some leaps right now and I may not close those out in November, but they could. And I'm also going to do some additional covered calls, but I may not do those that expire in November. So the premiums for those might push into December. Anyway, looking good and I can't complain. So one last thing I want to call attention to is our plan for November, December, and probably January with the targeted capital that we're using is going to be a little bit lower. So really the premise here is I was going to sell around $30,000 of a particular stock that I own in a different account. And that stock went way, 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 way down. So I'm not going to sell it now. So what I'm doing is covered calls against it. So I'm getting just a little bit of premium, but it turned into from 30,000 to around 16,000. So that's why the targeted capital went down. So I was going to sell that stock and move the capital from that into this account to do options on, but that didn't work out. So, and I'm not going to sell that stock at a massive loss. So what I did was I put just enough money in that account to get to exactly 300 shares even. That allows me to do covered calls on 3 complete lots, with obviously options being 100 shares per lot. So that's why that's a little bit different. And then in terms of when we're going to eventually get to our full 300 plus thousand, we're gonna sell a rental. But right now we are just getting ready to list that rental at the worst time of the year to list a house. So that could take 3 months. It could take 6 months. I don't know. But so that 320,000 for plan January, February, realistically, it's probably more like February, but it actually could be March. So anyway, so I just wanted to give an update on that. And just real quick, I wanted to talk about some mistakes I made last week in terms of Amazon. So when my position got stopped out, one of the things that I did was I wasn't even paying attention to earnings. I thought that earnings was in the morning, and that little bit of pullback was that day from the earnings. I was completely wrong. They were announcing earnings in the afternoon. And this is a big lesson for me. I learned a lot of stuff during earnings seasons, not to expect those types of premiums all the time because premiums are going to be phenomenal going across earnings. And also just really pay attention to when a company is doing their earnings. Some will do them before the market opens. Some will do them after the market closes. And that obviously impacts either that day's trading or the next day's trading. The only reason I say that is I had a 7% trailing stop, and it ended up getting stopped out on the day that they were going to report earnings in the afternoon. My whole plan with this leap, and again, remember, we made about 500 bucks on the leap, so I'm not complaining, but I'm going to complain a little bit. And what I mean by that is the whole plan with this leap was to let the leap go beyond earnings because me and my mentor, we believed that Amazon would have a good earnings. So my leap stopped out at a 7% of the all-time high. So it means he got up to like 13%, dropped down to 7%, stopped out, and I made 500 bucks. And it stopped out by like 13 or 14 cents. So just that day particular just had a tiny little pullback and it stopped out. And had it not stopped out, had I just made that an 8% stop or just said, you know what, I'm going to remove this stop until after earnings because I am playing earnings, right? Had I done that, the stock obviously gapped up significantly. I think it rose 13 or 14% after earnings, climbed again the next day, and that's pulled back today with everything else. But my $400 gain would have probably been around $2,500 to close to $3,000. So learned a phenomenal lesson that if you're going to play the earnings on your leaps, then play the earnings on your leaps, and either remove your stop loss. I mean, either remove your stop or make your stop a little bit bigger, like maybe 10 or 11%, to give that stock a little bit more room to move. So anyway, that's my lessons for this week, and let's take a super quick look at the markets. Yeah, so as you can see, the S&P is down around 0.6%. It was actually down around 1.5%. Looks like it's recovering a little bit. But either way, the market could close down around 1% today, which would be fine. But what this means for our options is when the market's going down like this, and again, I don't get assigned to this until that date. But if you look at the Schwab account, it will give you the value of what these contracts are, which are going to be significantly red right now. So I didn't technically lose any of this money. It's just the way that the contracts in Schwab are represented. It's going to show a massive loss. So it's kind of pointless to show the week over week and just wait and let today settle in. And then we'll do an update next week. So, but if you look at basically every single position that we have on a watch list is all just, it's all just down right now. So, and as an example, when the market's down like this, again, I have some cash secured puts, but they're not out for a couple weeks. So doesn't really matter. It might recover tomorrow, or it might recover over the next few days, and it may not. But with this, ultimately, what this could mean is just we get assigned a bunch of lots, and then we would start doing covered calls against those. And the premiums can be just as good if you do covered calls the right way when you own the shares. So that's basically the wheel strategy, right? You do cash secured puts until you own the shares, and then you covered calls when you own the shares, and you get premiums on both sides. And that's going to be about it for this week. So yeah, hopefully you're not an Alabama fan, but if you are, I'm assuming you're probably feeling a lot better about the game this weekend than I. But either way, go Tigers, and I'll talk to you guys next week.